Hello everyone, this is Tristan here from 𝗠𝗔𝗥𝗞𝗘𝗧, and in this video we will be going over Ethereum, starting from the monthly time frame all the way down to 4 hour, and do some technical analysis and see what we are expecting for price to do for the upcoming week, where the drawn liquidity is, and what is the more comfortable narrative going into the end of the month and for the upcoming month as well. So, of course, starting with the monthly, we all know we had a massive push to the downside in the previous 2 years. Then we had a sideways chop, and when we started the new year, we had a push up, and that has just continued through and through. So this was the furthest push down. This was the most recent high that was pushed down, lowest respected. So this is the swing. So when we range the swings out, we just do swing ranging here, low, high, and then this low is never taken. This high has now been swept based this was swept in April. We had a sideways month, a doji candle for monthly on for May, and now we have a pin bar for June. So what do we expect? Are we expecting the price to fill up this week and close bearish, or are we expecting price to go push into this week's and have a bullish closure? So just looking into price action, just keeping it clean. This was the high that is still pending to be closed above. Basically, we have a wick mitigation. We do not have any body closures just yet, so that's something that we can look at. So price for now, it is closer. For price is closer to this area. What are we looking at? Around 4 to 5% move from the high that is currently put in for the month to this strong liquidity and close above. And then this will be the rejection wick that we will start to work with once we have a bullish closure right about here. And then if you consider this weekend, that will be around 11% of the move to have a bullish closure. Once we have that, we start to look into price action onto the left hand side, and this is the fair value gap that we can look at. So on the monthly, so the 50% of that we can mark out as around here. So 2350 will be the Ethereum's 50% of the monthly fair value gap on the bearish side, which is the bearish because price is falling. This is a mitigation that will require and closure above for bullish price action, or then we can start seeing rejection from that. But so far, 2 areas, 1, 2, that's it. And to keep it even more clear, we can use price to have a better idea. So that's 2030. That's the high that was swept, come back down. So you will see price has pushed down around here. So let me just, there we go. So see price pushed down. This low was put in. We pushed up, pushed down. This low is lower than the previous low and lower than the next low. And then we pushed up and price came back down. So the reason why I am pointing this out is because price is fractal, hence this becomes an immediate range in the larger scheme of things. So looking at Fibonacci, this becomes a range as well. Now we have a 50% mitigation or deeper discount mitigation of the monthly range, and now we may start seeing price push up. Also, we can switch this into the extremes, and we have a 61%. So the golden pocket has been mitigated, and then we can start seeing further price action into the daily or the weekly. So we can drop down to the weekly now. Cleans up the narrative a bit more. So that's there. So looking at the weekly, what do we have? We have a push down, and we can turn on the values on this levels. So 61 was mitigated. We do not have a closure below. We came down, pushed up, and we were expecting in the previous video that, okay, price is now bearish. We are coming down, so we may see a mitigation, drop down into this fair value gap that is pending here, and then we can start seeing push up. But unfortunately, that didn't happen. We just came down. We didn't see any imbalance mitigation. We just had a fair value gap mitigation and then we pushed up. So looking at this fair value gap around here, perfect 50% mitigation. We can remove this range. That was the range that we marked out on the monthly. So now we have a better narrative on the weekly. Price came down. This was the last fair value gap that was pending, and we have a push up. This was the high. These are just relative equal highs, I'm pretty sure. Yep, relative equal highs. Little sweep, and then we just snap down here. This is where we are. We are on 15 hours away from closing the week. So these areas on the weekly are more important, and we can start looking into bearish. I would like to look into this bearish price action of the fair value gap, but just not yet, because we are still far away. But then again, it's not that far either. We can just literally snap back in and push up into this fair value gap. So we can just have this as a reference point for the weekly, that this will get eventually mitigated, and then price may come down and then push up, and then mitigation will lead us to further downside, mitigate these fair value gaps, fill up this week, and then we push higher into these fair value gaps. But that is just us trying to predict the market. We work with what we have in front of us. So recent push down on the weekly. Last week was a bullish week, which cleared out all this buy side, and now this area looks as more like the drawn liquidity. This low, that feels like it's the low has been put in, because this price came here, pushed up, we came back down, and if we look at this area, this was what, 61.8% mitigation. Bullish order block was tapped here. Bullish order and filled up the fair value gap. So we have a lot of confluences that are working towards bullish price action, which we definitely did see. 61 fair value gap bullish order block. So heaps of confluences, but we just keep it clean. We have two areas that we just marked. So now price has taken out the high, or at least swept the high. So this becomes our most immediate range. So if price wants to come back down, this will be the area that we will mark out. So if price wants to come back down, respect this and further push up. So this can eventually become a continuation bullish order block. So this was like this, and then we can expect price to become something like this as a chain reaction. So what that will tell us is that now the lows are holding and price wants to go mitigate the higher time frame POIs, which is sitting up into the bearish fair value gaps. Hope that makes a little bit more sense, but that's just the way I do my analysis, and I like to see the narrative and what price is doing when it comes to mitigation. So looking at mitigation on these areas, we can start drawing market structure and breakout structure, but that's just, again, going too further back. We already have this range. We can start marking out these areas. So 2030, this was on the weekly. We have a closure, but then we also have the same exact down candle. So that becomes a wick on the monthly. So for us, we would like to see a strong bullish candle like this close up for the month as well, to get more narrative in order. But we can just slide this across for now. This can still be our point of interest, but then we can mark out this area. So as our active range, we can mark out this area as our next active range, and so this will become our drawn liquidity, and we can just push that aside. Sorry, and we can just push this fair value gap aside in there. So on the weekly, this is what we are looking at, that price can start driving into 2023 and 2146 as the draw, and then we can come further down, mitigate, go up, back up. Also, one more thing we can look at is this was the fair value gap that was created, and now this becomes a balanced price range. So balanced price range, I believe I do not have that, so we can just do that. BPR. So balanced price range is an important concept in SMC and ICT analysis. Basically, it also can be coined as here, and this can also become an inverse fair value gap. And the reason, there you go. Two areas of interest, because this was a fair value gap that was created when price was pushing down on the weekly, and now price pushed through it. So a bearish fair value gap was filled up by a bullish candle, and now this can become an inversion fair value gap. So price can find support in here, and eventually price can start pushing back up. So that's the concept behind inversion fair value gap. So once they, if it was normal fair value gap, it should have continued being a bearish. We should have had bearish price action, and as this was a bearish, because it's a sell-side imbalance, buy-side inefficiency, it's a CB. So price should have just continued further down, but that didn't happen. We pushed through it, so now that becomes a balanced price range because price is now balanced, and we have inversion. We may have inversion when price pushes back down. So we will look at the midpoint of these areas when price comes back down to look for long entries. And we can also, at the moment, the high, this is not technically in, we need body structure closure, and then we start to see a pullback, a considerable pullback, before we consider like, okay, yeah, this is the current high. But just to look at anticipating what areas may look like, we can just mark out this area as a range. I'll just remove this a little bit too much, but just to keep things clean. See, that works into perfectly as a 50% mitigation of this current swing. And then we can start seeing bullish price action, or if we want to go further deeper into the range, then we have more areas like 79 and 886. But for now, we will just look at 50% as that is an institutional fair value buying for continuation price action. As we are clearing the buy side, we are bullish price action, we are pulling back into areas of discount to continue adding to the longs. This area was also mitigated, just looking at that. So what do we have here? And yeah, see, we have a 50% mitigation around here, and we also have a little bit of deeper push. So that looks all and good on the weekly. So that's our narrative for the weekly. Dropping down into the daily, what do we see? Push down. Okay. So this was our weekly. So we'll just mark that weekly bold and bottom right. Okay, look at this. Weekly continuation, we can remove that because that's not confirmed yet. This was the range that we marked out on the weekly, expecting it to be. So see, when you look at price action here, on the weekly, we didn't have any confluence here. We just had, okay, yeah, we have some discount zones, but when you look at daily time frame, you see much more narrative. Price pushed down, pushed up, we didn't close, pulled back down, and then we had a shoot up. I'll just try it with a little bit of skinnier. So this is price pushed down, pushed up. We do not have a body closure just yet. We just have a wick. We pushed down, and then we took that high out. So this high now becomes an important zone because this is where the origin of this bullish price action happened. And then now we are on the sideways chop. We can either come down into these areas, or we can just chop around here and then we can push up. So two areas that I can see. First, like this, and we'll go back to our original 50%. There we go. So we do not want to long from here because we do not know if price will continue going further up. We would like to see some mitigation of the deep discount zones or even at fair value. So fair value, what do we have? This is a sell to buy wick around here. So this becomes an important zone as well. So we have that marked out around here. And that is buy. So Sell to buy, price pushed in. I have discussed this before, but I'll discuss this again. They bought it, sold a little bit, didn't take the lows, and then they pushed it up. So they sold this to buy, which means that longs were entered. So that's one area. Second will be the confluence, of course, of the 50%. That's that. So 1, 2, and then we have 3. This is a very important area because this whole range becomes a bullish price action, this area. And we can mark that as a daily order block because price is fractal and everything works in tandem with each other. So very good. Got it. This area pushed down, pushed up, wick continuation. We didn't have mitigation, but we have a fair value gap. So we'll look to mark the fair value gaps out as well on the daily. So that's number 1, and that's number 2. That fair value gap in number 2, that is the premium. So we do not necessarily want to see like a. It's not necessary that we do not want to see price action around here in a way that we won't have any bullish narrative, but based on the way I work, I would like to see a little bit of a further price action to the deep discount or fair value and start forming some structure to the upside, high, lows, and then we can see some implosive. Also, one more thing that we can also look at is this area that we have here. These are relatively equal highs. So price is generating some buy side liquidity that can be taken out when we have mitigation of the deep discount zones. So few areas in mind, we can remove this. So number 1, 2, 3, bullish daily fair value, bullish daily order block, fair value gap, sell to buy, and 50% of the range. So if we push further down, these are the areas that we will look at, mitigation, and we can push up, take out the relative equal highs, and then we try to mark this area and then mark this area eventually. So this is the narrative on the daily, and we can zoom into the 4-hourly time frame. We will have much more idea of what the small time frames are doing. Let me pull this in. There we go. Weekly, push through massive bullish price action, come back down. What are we forming? We are forming sell side liquidity. Lows are still getting respected, but we are not breaking highs. So these highs are staying intact at the moment. We can push up, but these are important lows that still need to be taken out because we have bullish price action, which means that a lot of buy orders were entered here, which pushed the price up. Now they would like to create more liquidity, make people firmer into things like, okay, yeah, this is going up. People will enter longs. A lot of longs will get entered, and eventually once they have enough liquidity, what they will do is that they will just push a little bit up from a lot more people, and then it will come down, mitigate these areas, chop around, and then we strike back up. So that's one way of looking at price action, what it may do, but that's a narrative that we form. Sell side, buy side. Buy side needs to stay intact at the moment. We can see a little bit of a wick into these areas, but nothing major. We would like to see some follow-up on this price action. And now looking at this price action, do we have balanced price range or efficient delivery? See, price pushed down. Now let's mark this out. Price pushed. We chopped, pushed up, took the lows out. So these lows are taken. We didn't. Then we had this massive push down, push up, continuation. This area stays empty. So we have this inefficiency. Price push down, push through, we have this inefficiency. Price push down, continuation, we have this inefficiency. So we have 3 areas that we still have some inefficiencies that can be mitigated eventually for further price action. And we have the higher time frame range selection areas that we can work work with for added confluence. So at the moment, again, similar to BTC, a bit too overextended. If I want to see price action, I would like to see something like this into downside, like that and like that. Something like this, mitigation, and then we can expect price to just chop around here, deep, and then we continue up. So unless we don't have that, I'm not looking for any entries, but you can set alerts around here that, okay, if this low goes, I would like to see what price action looks like. So always a handy tool if you're using TradingView, always use alerts. It's a very good thing. You should have price alerts so you don't have to sit on the charts all the time. Alerts go off, do your TA. Have a narrative in mind that, okay, this is what I'm expecting price to do, and set alerts. Once they go off, go look at the price action and look, okay, is it fitting your narrative? No, not yet. Set another alert with whatever price action has given you at that time, and then work with it. We can set alerts in the fair value gaps as well. So what I like to do normally is that I would mark out fair value gaps like this, and I would like to just go onto the midpoint here. Once I have the midpoint, I will just look at add alerts. So once we have some mitigation of those areas, price will go, alerts will go off. We'll look at the price, and then we go down into the smaller time frames like 5 to 1 minute. See continuation if we are seeing any continuation price action. Once we come down into these areas and is price showing signs of continuation to the upside. Once it shows sign for a continuation of the upside, what we will do is that we'll look for our entry models. And once price does this, mitigation, and then price is doing this, we look for continuation, and then we take longs because working with the higher time frame narrative will give you high probability setups rather than working with against the market. That will lead you to higher losses. If you manage your losses, that's good. If you do not have excellent risk management, follow the trend. It's easier to trade, understand the manipulation of price action, and see what the overall higher time frame narrative is and what the price directive will be for the end of the month for it to become efficient. So that's my analysis for Ethereum, starting from the monthly all the way down to 4 hourly. And I hope this was helpful. Please do come check our Discord as well. Links are down in the description. And yeah, I'll speak to you guys next time. Until then, take care. Happy trading.